Federal Reserve decision, or lack thereof, on interest rates. They didn't make any move, but signaled we'll get some cuts here at some point this year. Doug Flynn joins us, certified financial planner from Flynn Capital Management. Great to see you. Doug, let's see if we can get through this. We talked earlier in the show about the Fed with Diane Swank, and I want to get your view as well. But let's listen to Jay Powell, if we can, together. The chairman of the Fed. He always has a news conference after, and here's what he said. Watch.
If the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. We are prepared to maintain the current target range for the federal funds rate for longer, if appropriate.
All right. Not exactly scintillating, but the point is, he says, yeah, we're going to start cutting these rates at some point here.
Yeah, basically, it's what everybody expected, and it sticks with the earlier forecast that they had put out there. And all that we're really waiting for is the start date, but it's saying that they are going to look to do 3 rate cuts this year. So that's at a quarter of a point each, about 3/4 of a point. We should be lower with rates by the end of the year. So it's data dependent is the term they often use, and they just want to get some more confirmation from the inflation numbers. As you know, some of the most recent information came in a little bit hotter than expected, so a little bit higher than they wanted. So if we get a little bit of lowering that, in that, and they're hinting to it, then they're going to start the cutting. But the market's expecting, it's looking to now maybe June and July for the cuts, where before it was, March or even May.
I mentioned I was talking to Diane as an economist, but from your point of view, dealing with clients, I'm curious to what you're telling them they should expect or anticipate that they'd be doing with their money. In other words, they've been saving now in money market accounts and other accounts where they've been actually making some money. I guess maybe those rates go a little bit lower. What types of shifts have you been suggesting?
Yeah, it's a good question. And so what happens is, while money markets are paying over 5%, you can get similar yields in going into some short-term bonds and bond funds. And the big benefit to doing that is that if you go out a year and rates are maybe 1.5% lower, and now your money markets are in the 3s, those short-term bond funds are going to have that higher yield that you bought now, and you have the potential for some price appreciation in those bonds, because as interest rates go down, the prices of those bonds go up. So we are starting to look to shift to not go crazy long term, but just start getting out there some of that, put that cash to work, because 5% is easy, and it's easy to leave it there, but you could very well see that slip into the 4s and the 3s next year. So lock in some of those yields now.
Right, that'll start to move along with the Fed. Next topic I want to talk to you about is one we've been talking about, because we talk about NVIDIA, it seems like every time you're on almost, chips. Well, President Biden, in some way, was talking about that very subject today at his stop, and I want to listen or play a little bit what he had to say about computer chips, and then come back and get your take on it. Here's the president.
I'm thrilled to announce the latest public-private partnership and one of the largest investments in semiconductors in the United States ever. A new landmark agreement under the CHIPS and Science Act between my administration and Intel for up to $8.5 billion. It's a smart investment.
All right. Is it a smart investment? $8.5 billion grant for Intel. What do you think?
I think it is. And Intel's in a unique position because they're one of the only firms that actually does the manufacturing of the semiconductors in the U.S. So they call that fabs, and in fabricating it here. NVIDIA and AMD, while they design them here, they ship it off digitally to Taiwan Semiconductor in Taiwan. And so they don't manufacture here. So Intel both designs and manufactures. And what they're looking to do is bring more onshore, because in the back of everyone's head is, if China invades Taiwan or there's a problem there, we cannot be reliant on the communists to allow us to get all the chips we need. We need to bring that more onshore. So that's what this is a jobs push. It's a program to build infrastructure in the U.S. for U.S. manufacturing of those chips. And they're talking about facilities in Ohio, plants that they're going to, actually Taiwan Semi is going to get some of this money too, to build plants in Arizona for chips for Apple and AMD. So there's, and when you look into this, those are very good things on multiple levels.
Do it ourselves rather than have them do it. It makes a lot of sense. I got, before I let you go, I was going to give you a hard time, but the question in our Ask Geraldo segment, you guys may have noticed who asked it, right? Look, Doug Flynn. But this may have turned out to be the best question of all time. Did you hear his answer? The guy Moreno out in, that's his car dealer, apparently. The guy who won the Senate primary. Very interesting. Keep the questions coming, Doug, from our audience.
I'll try.
The Peanut Gallery. Thank you, Doug. Doug Flynn, financial news, viewer questions, whatever we need.